So this is the first big news. The apparent stabilization of Bitcoin's value. This is from the European Central Bank, everybody. So this is pretty big. The apparent stabilization of Bitcoin's value is likely to be an artificially induced last gasp before the crypto asset embarks on a road to irrelevance. The European Central Bank's blog looks at where Bitcoin stands amid widespread volatility in the crypto markets. Okay, let's check it out. Got it right over here. It's called Bitcoin's Last Stand. It's so funny, like you just see how sentiment really just changes, and everybody sentiment basically always trails price movement, and then price movement is always ahead of the sentiment. So it's kind of like a reinterpretation, like people just create all these narratives. Price went up like crazy. Everybody's saying hyper Bitcoinization. We're going to have the world reserve currency is going to be in Bitcoin, which is underratedly like ridiculous, because Bitcoin would make a horrible currency. Like, who would want to spend something that goes up a million X in 10 years or whatever it is? Like, it would make a horrible currency. Like, people just don't understand currency. But that's just narratives that happen when people see something go up in value so quickly. So let me read this to you. Another one of the trailing narratives. The value of Bitcoin peaked at $69,000 November 2021 before falling to $17,000 by mid-June 2022. Since then, the value has fluctuated around US dollar value for $20,000. So for Bitcoin proponents, the seeming stabilization signals a breather on the way to new heights. Bullish. More likely, however, it is an artificially induced last gasp before the road to relevance, and this was already foreseeable before FTX went bust and sent the Bitcoin price to well below $16,000. So Bitcoin is rarely used for legal transactions. That's the first claim they make. Bitcoin was created to overcome the existing monetary policy and financial system. In 2008, the pseudonymous Satoshi Nakamoto published the concept. Since then, Bitcoin has been marketed as a global decentralized digital currency. However, Bitcoin's conceptual design and technological shortcomings make it questionable as a means of payment. Real Bitcoin transactions are cumbersome, slow, and expensive. Bitcoin has never been used to any significant extent for real-world legal transactions. That is true. That is true. In the mid-2010s, the hope of Bitcoin's value would inevitably rise to ever new heights because to dominate the narrative. But Bitcoin's okay. So let me just react to this part where they're saying that it was never used for real transactions. But that's what they failed to really understand, is that it's precisely for that reason that the price has gone up like crazy. The way it works is, and Richard Hart did touch on this. So the way it works is, if something is a currency, if it's used as a medium of exchange, it has a high velocity. And for inflation to happen, you need an increase in the monetary supply. That's one of the factors, and then you need an increase in the velocity of money. If it turns over hands at a quicker rate, it's cheaper, because that's indicative that it is easily available. And if it's easily available, it's likely to be less valuable. So the reason why Bitcoin was able to have all these insane run-ups, it's up 1,000,000%, 1,000,000x. It was up 1,000,000x at all-time highs or something, a couple million X, maybe 8 million X. I forget exactly what it was, but it was precisely because it made a poor currency, because people didn't want to spend it, because the transactions were slow and expensive, and it went up like crazy, which is why it would make a bad currency, because it went up like crazy, so people didn't want to spend it, and all those kind of things. And also so I'm saying that's exactly why it went up in value. If it were used as a currency, it would not have this kind of price appreciation generally, because people would need to spend. I'm saying people would need to spend it to buy food and things like that. So it would just move around. I don't know, but perhaps because it's like so scarce. Yeah. So I guess you could say, technically speaking, if it were used as a currency, if like Klaus Schwab would declare Bitcoin is the world reserve currency, or Jerome Powell would say it's the world reserve currency, you have to pay for everything like that, then everyone would need to buy it, and then it would drive the price up like insane. But then it wouldn't be spent, and people would resort back to fiat currency. And if it would legally have to be spent, then I don't know. That's just not possible. It's not possible. It's not possible to be a currency, because if it were a currency and the price went up like crazy, no one would spend it, and then that would stagnate growth in the economy, and everyone's businesses would go on. I don't know. It's a complicated situation, but it would make a horrible currency, which is why Hex is so great, because it took what made Bitcoin so valuable, which was the fact that, people buy it and don't sell it. And then it's like, we're going to bake into it incentive to not sell it. We're going to program a monetary incentive, a trustless monetary incentive that makes people buy and not sell, and obviously makes the price go up. So it's really what Bitcoin, it's like basically what made Bitcoin great, just that much greater, because it's baked into the cake. It's in the program that people are going to buy it and not want to sell it. So yeah, let's go further. Sorry about the tangent. In the mid 2010s, the hope that Bitcoin's value would inevitably rise to ever new heights began to dominate the narrative, but Bitcoin is also not suitable as an investment. It doesn't generate cash flow like real estate, or dividends like equities. Cannot be productively or provide social benefits, so like commodities like gold. The market valuation of Bitcoin is therefore based purely on speculation. That's true, but that doesn't mean it can't go up in value, because if people buy it and then they don't sell it, then it will go up in value inevitably. But actually, Hex does pay dividends, and I guess you could say it generates cash flow provided it maintains its values. Well, it doesn't pay dividends. It pays inflation, which is yield, which is trustless. So it does have that advantage. That's why Hex really has that product market fit, but just all the more better. Speculative bubbles rely on new money flowing in, correct. Bitcoin has also repeatedly benefited from waves of new investors, correct. The manipulations by individual exchanges or stablecoin providers. What's the evidence of that? That Bitcoin went up so much because of manipulation. What does that mean? I don't really understand what manipulation means. I mean, manipulation, I guess if you have a lot of money and you buy it, is that manipulation because the price goes up? Stablecoin providers during the waves are well documented, but less so the stabilizing factors after supposed bursting of the bubble in spring. Big Bitcoin investors have the strongest incentive to keep the euphoria going. At the end of 2020, isolated companies began to promote Bitcoin as corporate expense. Some venture capital firms are also still investing heavily despite the ongoing crypto winter. So isn't that bullish? So despite the ongoing crypto winter, VC investments in the crypto and blockchain industry totaled $17.9 billion as of mid-July. That's really the case for that it would come back. And then there's, okay, we don't have to read everything. It says there are 320 lobbyists, up from 115 in 2018. So that's in 2021. There's probably more now. Yeah, so then they're talking about the regulatory bottleneck. Yeah, obviously it's going to be slow to regulate. So it says the current regulation of cryptocurrencies is partly shaped by misconceptions, the belief that the space must be given to innovation at all costs stubbornly persists. Since Bitcoin is based on a new technology, DLT, blockchain, it would have a high transformation potential. Firstly, these technologies have so far created limited value for society, no matter how great expectations for the future. Secondly, the use of a promising technology is not a sufficient condition for an added value of the product based on it. That's not true, because if you want to use the blockchain technology, you have to buy the token. And obviously, right now, there's not adoption to the point where it's driving up the price like crazy. And it's always going to be given the current fiat environment where they're printing more and more money every year, it's going to have an inflated value the same way real estate and stocks have an inflated value, so to speak, then in comparison to what it would be if like people weren't speculating on it, because people just have to speculate on things. That's just the way it works. People have to speculate on things to preserve their purchasing power, because in the current system, if you don't and you leave it in money, your money just dries up. It loses 2% of its value every single year. So there is a need for people to put their money into stocks, bonds, real estate, and now crypto. And there is a use case for crypto, like Ethereum. If you want to use the Ethereum blockchain, you need to own Ethereum, and it's proven itself useful already. Like you look at DeFi, that is an excellent innovation where there's borrowing and lending and things like that, which is a significant part of traditional finance, and it cuts out so much costs. It removes so many middlemen, and it's trustless. It's unbelievable. And there's obviously the potential for stocks to be listed on these decentralized exchanges. Imagine that. Imagine these stocks were on the blockchain, which they're probably going to be. They're probably going to be tokenized, and you could trade them trustlessly. That's a pretty unbelievable innovation. And if that goes well, then crypto's here to stay. And it's already been like, they're talking like this is the first bull run. That's another thing. Like, this is not the first rodeo. Bitcoin's been up 3 other times, and every time it goes down, you have the same exact sentiment. You have the same people saying that, oh yeah, it's never going to come back. It's unproven. There's no regulation, everything like that. And then it always comes back. So that's not to say that every single crypto is going to come back. I think most of them aren't. But if you're in the right ones, you are going to do pretty well, in my opinion. Obviously, none of this is financial advice. But yeah, this is just like, it's just like run the drill. It's like prices down. All these banks and mainstream media outlets go back to, oh yeah, it's never going to do well because the price is down. And then it comes back. It's kind of programmed in the code of Bitcoin also with the halving, right? So the amount of money hitting the market from the miners, so the inflation, it gets cut in half, which just generally sends a huge supply shock and drives the price up. I mean, things have been working like clockwork. So that's what I'd say about that. And they talk about the unprecedented polluters consumes a lot of energy. That's true. There is proof of stake now, which solves that. And it's good for the tokenomics, because you don't have miners dumping on you. It says 1 Bitcoin transaction consumes hardware comparable to the hardware of 2 smartphones. The entire Bitcoin system generates as much e-waste as the entire Netherlands. This inefficiency of the system is not a flaw, but a feature. It is one of the peculiarities to guarantee the integrity of the completely decentralized system. Yeah, but yeah, that is really the argument for proof of stake. That's what Vitalik and Charles Hoskinson and Richard Hart obviously would tell you. They'd probably bring that up. So that could be a testament to Bitcoin won't stay around. And I'm not sure if it will or it won't. Or maybe it'll upgrade because it'll be forced to be innovative. But that's not a testament to cryptos going away and never coming back. I think it's quite the contrary. And then they say it's promoting Bitcoin bears a reputational risk for banks, since Bitcoin appears to be neither suitable for payment system or form of investment. It should be treated as neither in regulatory terms and should not be legitimized. And this should not be legitimized. It doesn't mean it won't be legitimized. Similarly, financial industry should be wary of the long-term damage of promoting Bitcoin investments. Despite short-term profits, they could be, even without their skin in the game. Despite the short-term profit. And not short-term, it's already been around for like over 10 years. And if you got in the beginning, you made life-changing wealth in a very short period of time. The negative impact on customer relations and the reputational damage of the industry could be enormous once Bitcoin investors will have made further losses. Yeah, nothing really new here. It's just kind of just running the drill of how it goes. And I think another thing is they really overcomplicate it. They really make it like they make it basically like it's like it has to have use case as an investment and be used as a medium of exchange in order to achieve legitimacy. But these things, and it just goes back to what Richard Hart just keeps saying, it's all really just memes. Like none of these things really matter. What really matters is that people buy it and don't sell it, right? That's all that really matters at the end of the day, that people buy it and don't sell it. And that's really what happened with Bitcoin. And, I think it will continue, at least in the short term. Whether or not Bitcoin survives over the long period of time is a different question. But then obviously, and you have in Hex, people buy it and they're incentivized not to sell it. And if people just keep buying and not selling, then the price goes up, and then more people buy, and then the price goes up. That's really what it comes down to. That's really what gives something its value. Same thing really is applicable to stocks. Granted, they'll tell you that it's backed by a company, and there is something to that because the board is held accountable. They are legally, I mean, I don't know how much they abide by it, but they are legally obligated to do what's best for the shareholders. If that means paying dividends, if they have excess cash, or they buy back their stock so the value goes up, I guess you could say that provides a floor. But really, at the end of the day, we are in a paradigm where the current financial system basically, we're in a fiat system, and there is inflation. On average 2% a year. Now it's been a lot higher, but basically, if you don't put your money somewhere, you're going to lose value. So money has to go into things, and blockchain obviously has a use case. Cryptocurrency has a use case, and it is for that reason that the money will the money will go to crypto. It will continue to go to crypto, in my opinion, especially if there's incentive programmed into the crypto. And the testament to that is that it came back so many times, and it just keeps on coming back. So nothing novel. I think if you just come into crypto, I think you'd be a little bit shaken by that. That could really prevent you from buying in. But once the price goes up like crazy, people disregard all the FUD. Everything pretty much goes, is obsolete to the fact that people are getting rich from it, and people just come in and they want to buy more. That's just really how it works. Yeah. So that's really my take on that.